Okay, traders. Let's see how this stream's going. We're still getting that same sort of issue. It's I don't know who's on at the moment. Just let me know if you're getting buffering. It seems to be, we're ticking along okay. Similar issues to last week. I'm not sure what it is. I sort of cleaned up a few things. It could be, it's more than likely just OBS, just decides to have a problem. But we'll see. We'll power along. We'll see what we can get in. See what I can jabber on about, and we'll go from there. It may be, I don't think it's my computer. I keep thinking it's could be my computer not sending the information well enough, but the internet seems to be fine. So we'll hope for the best. G'day, Pete. Are you getting buffering, Pete? Or is anyone else in there just getting a bit of buffering? It seems to be cleaner now. This is what happened last week when it kept going down. It's yeah, all right. Let's just hope for the best. All right. Now, oh, what happened there? Just watching the Hang Seng. I don't know if that's yeah, worked on the downside. So on the Hang Seng, I was actually looking at the 5-minute trading day. I don't know if you're trading that working. I'll just show you here. No, don't worry about that. Oh no, it's not working. So anyway, my chart's just closed up. So you've got the a 5-minute trading day. I was just watching the Hang Seng Open. Anyone that's following it knows which way it goes, how it works. I've just it didn't work. I thought it was going to work to the upside, as in rally and give us 30 points. It was looking pretty good there for a second, but the good thing is if you don't, I'm just going to open up the charts again and show you. Let me just sticking to the rules. It seemed to work really well then on the downside. So let's get the chart up, see if that can. So that's the two levels. Is that coming through? Okay there. Where is my chart? Here we go. That's what I want. There we go, stream, good. Yeah, so I'm using my phone data, yeah. No buffering, all right. It could be your phone, mate. It could just be on mine. I might have to get my phone out and do the same thing, Pete. All right, so I was looking for this break up here. I was looking, that was the opening candle. Opening candle there. Started to play around. I thought it would spike up and take out these highs the way it was grinding down, but instead it's flushed out these lows, which is not a bad sign. And it gave us the 30 on the downside. I actually didn't. I was more concerned about that rally there. I thought of just getting nice and early there, and forgot about this work. So, yep, that for sure. 35-point drop. So that's all we needed. So that was good. That was a good little move there. Now we'll today. G'day, Paulie. Did you jump on that, Paulie? The move, and it actually works. I think it worked last Friday. It worked well. The DAX has been having a bit of an issue. The DAX is, and it's a lack of volatility in the DAX. If anyone's watching that one as well, so if you're going to steer clear of one of them, steer clear of the DAX at the moment. Look, generally, it's not that it's not working. It's not as consistent. And decide to jump on, watch it, traded it, made 10 on the upside, and then turn it off. Done, job done. So yeah, that's the Hang Seng's looking good. That worked okay, and it's been it's been producing the goods the last few weeks, which is nice. Just tick it away nicely. I mean, you're not going to win everything, which is one thing, but it will be nice and consistent. So that's great, Paulie. That's good to hear, mate. So yeah, what I'll do, obviously now you've got what we can chat about today. We'll see how much we get through. Remember the first sort of half, I'm going anticipate to go for around an hour. I'll jab right of the month. So being last Friday being the first Friday of November, generally the first Friday, um, unless it happens to fall on the first or second, they tend to push it back to the next week. But the first Friday, you get your payroll numbers, and they're the biggest ones. So that's what the Fed is looking at the moment. What's the employment situation? And if they keep spruiking, it's employment that's our concern. It's our employment that's our concern. The labour, we want to get back to full employment, and then they're showing good numbers like they just did on Friday. It's going to bring into focus again rate rises. And the problem is that Fed is, and it's been, I feel, a coordinated effort. The RBA, the BOE, ECB, and the Fed Reserve, all saying the same sort of thing. We want to get back before we raise rates. We get back to full employment, and they're all going well. Inflation is sticking around. We spoke about that last week. Consumers are still there. Coming out strong as we come out of pandemic. There's going to be more money spent. People earning good money because the economy is going strong. So I would expect inflation to continue to be high. So sorry, just watching it buffering. It's got to settle. Keeps dipping lower. Oh, this is frustrating. Sorry, guys. This hasn't happened before. Let me change. I'll do the same thing as you did, Pete. I'll change over, which I've done. Let's go to my phone and just see if we can get mobile hotspot. Let's see. Let's just see if that works okay. Can you all hear me, guys, if you're on? Okay. All right. So I'm assuming I'm coming through okay. Yep. All right. That's great. What I've done, I've got internet, which gives me two different sort of signals coming through. And for some reason, if I restarted the internet a while ago and I just looked at that then, there's one feed that's maybe the one dropping out, I'm hoping, but the other feed seems to be really good with internet feeds. So I think it's got more to do with the internet just being unstable on one feed and the other feed's actually okay. So we'll see if that can keep plugging away nicely. And if that's the case, then we shouldn't drop out. So again, sorry about that, guys. I'm not an IT guru, just a trader, a basic trader. But it seems to be holding a bit more firm, a bit more consistent at the feed at the moment. So let's keep going. So yeah, what I want to talk about is obviously the bonds moving the market around. We've got the US data come out on that's not what I want. US data come out on Friday, payrolls. So we all know that the Fed is pushing jobs. RBA, they're all at the top end of their inflation. And the funny thing is why I say colluded or coordinated effort, because the BOE, the Bank of England, was expected to raise rates. It was largely expected by analysts alike, everyone, and they didn't. Now, that to me was a bit strange. I mean, they voted against it. Everyone's sort of reluctant to raise rates at the moment, and they've all got good reason because inflation's are high. They're all banking on this thing being inflation to be transient, which it's already proven not to be. But they just keep pushing it. Oh, it should be transient. It should be transient. Keep saying the same similar type of thing because of supply chains and things. But problem is supply chains can come out and demand is pumping, and inflation will stay high. So to me, it's kind of they just don't want to prick that bubble, and I think it would prick the stock market bubble. Which I don't, because you got to think about it. Tech stocks are every time they talk about inflation and concerns and rate rises, tech stocks will be weighed down when they've been given the all clear, like they bounced. Jobs data come out Friday night really strong, which points towards a full employment, full labour force in the US, and then they were kind of weighty from the open. So that to me is saying if they're going to start to raise rates, tech stocks could really get hurt. And you got 4 or 5 tech stocks that are basically supporting the S&P and supporting the Dow, supporting the US market. This thing could. I'm not saying a major sell-off, but I think it could perpetuate lower. Because everyone's sort of expecting weakness. If it starts to play about, even if it's unwarranted, into some of the shares, they could still get hit. Okay, they still got debt issues in the US. They keep the debt ceiling they've got to raise again. I think they're going to look at it again in the 2nd of December. I think that's the date when it's due. So they just keep lobbing out more debt at the problem. They've got the package that they've just announced over the weekend, the infrastructure package, which would give the market, again, I see that as inflation because it's spending, goes into someone's pockets, which in turn goes into the economy. I see that as inflationary. So I don't think, I'm just a bit of a bear at the moment because I think it's due for something, and it's not so much being a bear. Like I've always said, you've got to make sure that you're understanding the risk when you're in the market. If you're just getting in guns blazing now, when we're at all-time highs into the US, into any market, when you're trading at all-time highs, the risk is you can get hammered, and there's less and less risk to the upside, as in not risk, less and less probability. The higher things go, the less probability it's going to keep going high, and the more probability opens up to a move to the downside. Okay, it's just natural phenomenon of the market. It's got nothing to do with fundamentals. It's just human psychology. If you're sitting on something that's doing really well, the higher it goes, the more the more you feel pressured to lock in some gains. Okay, so not the fundamentals, not the macro. So all you're trying to look at is what could trigger something like that. What could trigger the sell-off? What could trigger me to be concerned about risk? All right. So if you're getting into market now, you've really got to understand where your risk lies. And that's why I'm constantly, probably sounding like a bear, constantly trying to figure out where my risk lies, where it lies with regards to, the current situation. Now, are we buffering? I am maybe buffering. I'm hoping not. It still looks like it's like, yeah, it's good. It's just me. It was stuck with my face on the screen. I think it was just my my browser. All right, so this is, that's a hang sync, don't worry about that. Let's go quickly over everything. US dollar. Now, the US dollar sold off. I'm still bullish on that. That sort of sold off. So you got a bit of a buy of the rumor, sell the fact into the US dollar. The same with, it was the same with bonds. Bond prices have been edging, or yields have been edging higher. So now that number come out, which I would have thought a good employment data, I wouldn't have thought they were expecting something phenomenal, because they actually expected it to bounce from the previous number, which was weaker because of the pandemic, and now that everything's coming better, the numbers are really, the employment data coming out a lot stronger, but it was stronger than expected. I would have expected bond yields to tick higher, which they did initially, so it was just really a setup. It was a bit of a push down, trap some shorts, and then flushed them all out with a rally. And the same with US dollar. US dollar popped higher because that stronger number than expected, it extrapolates to interest rate rises down the track. So US dollar popped higher, which you can see just here. This was around that number. Numbers were 11.30, popped higher, trapped some longs, squeezed them straight back out again. But I do think that longer term, the US dollar should be ticking higher because everything's lining up. Now you got to remember, with regards to the euro, pound, and everything, the US dollar is the favored currency because of yield, and they're looking, the economy itself, the US economy compared to Europe and England, that is doing a lot better. So flows will naturally go into the US dollar as opposed to, the pound the Aussie and the euro because of the interest rate yield, okay, for currencies. And if they're expecting the US dollar to, or the US rate rises to be faster than others, they're sort of flowing into that US dollar, which means it's probably, in saying all that, when the US dollars, when you buy into US dollar, where are you going to put it? You're probably going to put it into shares at the moment, or you could put it into bonds because you're going to expect to, buying the US dollar, buying bonds as well to get a better yield down the track. So yeah, all these little things. That to me, US dollar, if we'll just go to an hour daily. Don't worry about too much. That's in an uptrend. We're pushing higher. We've got off this double bottom, you'd say, this nice base. We could be said to be range bound, but the fact is we've come down, we've popped up, we've got this lower high, we've pressured down into this low, and then we popped up, made another lower high. So this is a lower high I'm more concerned with. The fact that we've come down, reacted off this low again, and we're starting to push higher. We pushed higher through that 93.22.5 level. So we're not in a downtrend, which this is the downtrend. Okay, we're not in that downtrend anymore, which means to me, we're starting to lift. It's this level here at 94, 60, 70, just below 95, which I would expect to be pressured. Okay, and that's just from what I said before, with favored into the US dollar, pressure into the US dollar, people wanting to buy US compared to euro and everything else. So I do expect, with any sort of rate rise news, we're getting closer to a rate rise than we're getting, rather than getting further away. So things were coming out that side, strong economy, very strong economy, high inflation, which supposedly is transient, whether or not we are. It's a strong economy. Inflation's it's actually, at the top end of their scale where they should be looking to raise rates very soon. So the better the data that keeps coming out, or say with jobs and things like that, the more inclined that we push higher in the US dollar. Okay, so on longer term, I expect that to pressure higher. Look at bonds. And saying all that, you would expect this is the 10-year bond in the US. We've had this is the daily chart, big move up, found a high. What was that? That was May 2020, when it spiked up in the start of 2020. Then it's been, pushing lower. So we've got, remember they're inverse to yields. So when you're talking up interest rate rises, and it's really hard with bonds because they shouldn't, when you got interest rates near zero, what sort of further upside, massive move up? What big upside move could be on the cards? I don't think anything, because you're talking about rate rises. So generally we should be heading down. We've had this little push down, took out these lows just in here, took out those lows, bouncing back, but I do think this level is going to hold. This is kind of the level I'm looking at to hold. Yeah, we might get a flush up because really everyone's just waiting for the Fed to do it. It's not whether they're going to raise rates. It's kind of when are they going to raise rates. So a rate cut's definitely off the card. Holding is off the cards for now because inflation's pressuring the interest rate narrative. It's kind of when. So if they're going to raise rates, that you're generally expecting bonds to trend down. So I'm expecting that level to hold, maybe a bit of back and fill here. Back and fill, I mean, popping up, squeezing out, and then resetting at a lower level and then going down. That's probably longer term what you're expecting. Okay, just because we popped up because of the payroll number on Friday doesn't mean anything. It means that they're squeezing some traders out. Okay, resetting, but longer term traders are looking at something that's slightly different, a bigger move. But that number there is just stacking up to what they've been watching, with regards to inflation, CPI numbers, employment numbers, all that sort of stuff is all stacking up. And they were talking about that participation rate. I had to Google it. The participation rate, which came out on Friday night too. Participation rate, if I can say it, is relatively stagnant. When you've got a high participation rate, it means there's higher jobs, more jobs, or more people actively looking for jobs. When it's a low, it means they're not looking for jobs, which could mean full employment. You're getting towards that full employment. Okay, if there's no one really looking for jobs that wants one, then you're sort of utilizing all the potential workforce. If that makes sense. So that to me is kind of a bullish on interest rates, and that's what they said. If that continues to ease off or remain, unchanged, that's bullish on rate rises. So you would expect bonds to start ticking down, US dollars to start ticking up. Now gold, we'll go over a few commodities. Gold, I don't want to do it. I don't want to delete that because I put all my data on it, but that's your daily. Now gold, yeah, inflation hedge. I'm not a big believer in that because it's going lockstep with the US dollar. US dollar headed down on Friday, gold bounced, and I think things like gold and other markets, a lot of markets, gold's heavily algo driven as well. So algos can just drive it a certain direction. It looks bullish and they turn around and drive it back down again. When the weight of numbers is loaded to the upside, they can drive it down because they're triggering stops, they're triggering people to exit and so on. But it can be really not manipulated as such, but algos can really jump in there and exacerbate a lot of moves. Now for me, this this price action recently, say since July, was it last year, or July this year, has been kind of choppy. We had that sell off. It's been kind of choppy. It's been pushing into the lows, rebounded, pushing into the lows again here. We bounced back. So on a daily basis, it's kind of uncertain. That's got to do with the US dollar. You sort of think, well, if we're going to, US dollar's going to rally, it's going to, and it has in the past, in the last few weeks, every time the US dollar's rallied, gold's come off. If US dollar falls, gold's bouncing. So it's not an inflation hedge. It's just reacting like a currency, like the euro, like the pound to those US dollar moves. Now, if this starts to get a bit of support, which actually I'll just delete that, which you could easily do. This is what I'm looking for. It can easily get a bit of support, but I think it's going to run headlong into some resistance up here at around the 1830 mark. It's a level that's traded quite a few times in the past. You can see it's traded 1, 2, 3, essentially getting up there again now. That could drag in some bulls, turn around and squeeze them straight back out, but that downtrend is still intact. Okay, obviously these are your daily support levels. We've got a little high low, which is just holding in here. And then you've got some little minor levels on a daily basis too. You're holding this level in here. So that's what we're looking at. Well, that's what I'm looking at, not we, but I am looking at on gold. It rejected that level 11, say 1760, thereabouts, pushed in there and bounced back off it. So if we go to the tighter time frame on the 30, it's in an uptrend, but this is the zone where I would expect some selling pressure to step in. I think it's too big a level to break, and that's probably because I don't think the US dollar is going to head down. The US dollar needs to get smashed for gold to just spike up and through and take off, or at least gold's US dollar is going to show signs that it's at resistance and it's going to start to find some selling pressure, push in and pressure gold down. Okay, so that's what I'm looking at with gold. We'll get on to, there's a few others. I mean, if you go and look at, say, other commodities like oil has been, as we come out of the pandemic, increasing demand, oil's been popping up because there's limited supply. There's a bit of an imbalance at the moment between supply and demand. I might have to delete that too. If we go out to a daily chart, that's, since when it went zero, which was just really stupid, when it went down below zero, I find that really harsh. I find that because it just should not have gone below zero, and that's a system error I see, and people got caught out, lost a heap on a system error when something goes below zero, which really shouldn't do. If you're buying and selling something, you're selling something. Why could it go below zero? It means I'm paying you, you're paying me to take it, or the producer. It doesn't make any sense. It doesn't even make any sense when I'm trying to explain it. But that massive system error with, no one ever thought it would have to worry about oil going to zero, let alone below zero. So there was no systems in place like, your trading systems just kept selling. They don't care. There's nothing to say, hey, stop selling at zero. They go, no, we'll just keep going. Algos kept driving it. Everyone, and people got smashed on those times, which doesn't make sense. But anyway, got off topic. It's been rallying since, okay, been in a solid trend up. You've just got this move up, move up, move up. You can see that on a daily basis. We're extended now. These is sort of your legs up. We've had a leg up, a pullback, another leg up, a pullback, a deeper pullback, another leg up, okay? So I feel now that we're in a bit of a pullback mode, and that's since we broke, it's about here, I think, that level there. So if we get into a smaller time frame chart, that's about 81, I think, 81. Smaller time frame chart. This is choppy. That's a real bit of a choppy mess. Crude is another one that can be algo, driven and played with by the algos. They tend to drive it. They'll flush out support levels and target stop losses all the time. Okay, and they do it, time and time again. They do it in gold, flush out levels where they know there's going to be a build up of stops. They pay for data. Exchanges give them data on levels. They can work it out and figure out there's going to be a lot of stops under that level. We can flush that out, work our way down there, put the pressure on, trade them out. They all get short. We bounce straight back up again and do the reverse on the upside. Not saying they can drive a market or manipulate a market, but it can be highly algo driven, hard to trade. And you can see that. I mean, if you were trying to trade that, look at these bounces straight up, got up, and that wasn't so bad a move. Big up move there, and then reversed on a dime, drove straight down below those lows, and then reversed on a dime again, and started to hold and straight back up. So it is choppy crude, but that to me is all part of a corrective move. Okay, and when you get those corrective moves, you've got to understand there's still probably some buyers. Okay, if you've got some bigger funds that are buying oil, they'll just buy it on a dip, because their average price is more important than exactly where they're buying it. They're not buying it here with a stop, as it like I would potentially. Here's you've got a good sell off down there. This starts to buy. I'll be buying the breakout with my stop below. They don't really care about that. They just buy because their time frames are a hell of a lot bigger than what I'm trading off. Okay, so there's different market participants, which obviously make up a market. They all act differently, but when you're in a pullback mode, they can tend to let it flush support. We'll be on the other side buying it and buying some up, just averaging into a position on a pullback, and then scaling out on when it starts to rally potentially. Whereas we got to be a lot more precise with our entries and exits. Okay, so this for me personally, would probably be a tougher gig to trade. That's on a 30-minute trade. Look, you could trade it on a lower time frame, but it's more scalping mentality than anything else. But what we're saying, or what I'm trying to say, is that it's had a good run up there, been quite consistent, good trend up. We're starting to break. So oil potentially rolling. Does that work into the overall inflation? Yes, you get higher cost of oil. If they're not going to, and at the moment, I think OPEC said we're not increasing supply to meet that deficit, a demand deficit. So that was supported at a price the other day, Friday night, which is why it rallied up. Okay, so if they're not willing to do it, then if supply is not going to increase and demand's going to increase as you come out of pandemic, then you would expect higher prices in oil, which again works into it higher inflation too. Okay, less money to go around everywhere else. If you're paying higher prices for one thing, you've got less money to go somewhere else. Okay, so that's for me. If they're gonna open up more, they're going to start producing more. That should weigh on obviously oil, but they're not going to be willing to do that. But if they do that and weighs on oil, then that would help the inflation narrative being transient. But at the moment, it's not. It's just whether or not you've got to look at that demand side, whether or not demand is going to keep sticking around, because has it been factored in with all that, that run up to 85 from negative whatever up to $85 a barrel? Has it been factored in? Everyone coming out the other end of the pandemic, coming out the other side of it all. And the last one I'll look at, so it's just trying to get an idea, with copper as well. Copper's another one that's not so much. It's probably, we'll go back to a daily as well. Could be a mess. We'll have to just, we've had a massive run up. The pandemic lows here, and it's been all one-way action all the way up. Okay, this actually, to me, looks a lot more bullish than oil at the moment. We've had a massive correction, and that's been really linked to that US dollar movements. And the problem with this, you've had, as the US dollar rallies, copper could come under pressure. Okay. With the most recent move, so I'm looking at this thinking, well, if the way this has moved down, I expect this is bullish. On a daily basis, we had a good run up here. We've corrected lower. We've held this level here. This is just a stock standard chart. I'll draw it up. I'll delete that. I'll draw it up. That's, with the base coming in around here, even slightly higher, that was where support's coming in. It's lifted it back up. We've taken out this level, but I don't like the way it's retraced. I mean, this is my biggest problem with copper at the moment. I don't know what happened to the US dollar there. Actually, can I just bear with me a sec? Just get to a daily chart, see what it did. Yeah, so that was this rally here coincided with the US dollar getting sold off quite heavily off a high. Okay, so it's really, no, that's not what I want. Sorry. So that rally there was when US dollar was coming off, and the US dollar started to pop again, started to get buoyed again, get supported. That's when copper's come off. So if we're starting to see further pressure into copper, that to me is a bit of a heads up that okay, we should be looking to expect a rally back into the US dollar. Okay, so that we're just at this key level. It looks like it's trying to hold. You can see in those last three candles in the daily chart, those last 3 days have been pushed into that low. So it's flushing the low, bouncing back, flushed it again, bounced back, flushed it again on that was Friday, and bounced back and actually finished up for the session. So, and that's because the US dollar was down. Okay, you just got to remember that what's happening with the US dollar. So if the US dollar gets buoyed again, I would expect this move down to continue. But if it can actually get a decent sell-off, we might get a sharp recovery in copper. So to me, these sorts of things are all working in together. Okay, but if you're looking at it from a different perspective, did we make a double top? So you've got, even though we're holding here, and that's why this has been quite heavy. It could be just a double top coming into play, and then we've got all this buying fuel to be squeezed out of the action. So if we start to have a bit of a pop, we have this sort of move higher, and on some a bit of a grind down the US dollar, and the US dollar starts to rally, I expect that to make a lower high potentially and push down. So if we do reluctantly, or copper reluctantly sort of pops back up or grinds back up and starts to get weighty up here again when things are getting extended, you might see a stochastic back up at overbought. The momentum's down on the MACD, so this could easily pop up, stochastic get back to overbought, when what I'll be looking for ideally is it gets a bit sort of that overbought area. I'll draw it up. Not making any sense at the moment. Sorry about that. Where's my little squiggly lines? No, let's not worry about that. But you know what I mean? It sort of pops up here, gets sort of the overbought region. MACD's still heading south, the pressure's still there, momentum's still coming off. We get a lower high and we might get an extension down to this support zone. So it could be range bound. But at the moment, I think, when you're looking at that chart there, the way it's reacted straight up here, up into the resistance, up into the previous highs, and comes straight back down again, it doesn't leave me to believe that the copper market's expecting the US dollar to come off a lot. Okay, it's probably more expecting some strength. You might see a big sell-off in the copper. We'll see. Anyway, that's sort of the key markets I want to have a quick look at. Bonds, do we look at bonds? Yeah, we did look at bonds. So, for me, it's all about what's happening in the US dollar. It's the same old story, and these markets are going to chop around until the Fed says, they've just said we're going to taper in the US. You can see that the share market is not overly excited about going up. That makes sense. You can see, we'll get to the daily charts now. We've got that's the S&P, into new all-time highs. Where's the trend? Is this kind of what we're looking at the moment? We're going to get a bit of a sell-off up here. We'll see. Dow, similar kind of thing. Maybe that's where we're at the moment, but that trend up was a lot more severe than what it's been lately. It's been grinding high, and don't forget, just because it's in a channel on the upside, with a lot of these shares, money continuously flow. I don't know exactly how it is in the US, but in Australia, funds, super funds, there's always money every time. There's 9% a month basically going to the market. Okay, it has to go in the market. So even though it's gradually it's kind of like, if it's not euphorically going higher, it's just a gradual easing. You get these sharp sell-offs. It doesn't lead me to believe we're a very confident market. That Dow to me doesn't look super confident. We're at a zone now where we could easily roll over. Look at the Nasdaq. Nasdaq's in new all-time highs again. What's going to happen there? We're going to be looking at something like this. That's kind of the channel, most recent channel. All these markets, I mean, they are trending higher. When you're up here, I'm not going to go fully risk on into anything. I'm more inclined to go, or especially if you're trading in the US, if you've got shares, know where your risk is, tighten your risk up. When you're down at sort of these lows, you can add in. You can add into something if it starts to bite. This sort of scenario is where you might be looking to add into a portfolio as opposed to scaling out because it's starting to hold. You want to just see if it starts to hold at that base because the trend is still up. It's still in a channel. Holds, you get a higher low. Okay, you might add in up here. You might scale some out or take some risk off the table or tighten up your risk. Okay, but it's not, if you're new, it's not an area to be jumping into the market fresh because it's extended. Okay, and this could be the time we have a doozy of a sell-off. We don't know, or it could be just another time when we squeeze some traders out. We might pull back, squeeze some traders out. We might just do this, this sort of thing. Gradually go down and then squeeze out, and then we go back up again, just like we've done many times before. So there's people been calling to top here, 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 everywhere, and constantly getting squeezed out. Okay, so it's just a matter of remembering that. But there's going to come a time when you would expect we're going to roll over, and it's going to be when the Fed talk up interest rate rises. And I don't think that no one wants to do that. I think Powell's just trying to get through his term, leave it for someone else's problem. That's the way I see it anyway. And the same with government. Someone's going to be left holding the bag at the moment. When the music stops, someone's going to be left, one government or, someone in the Fed Reserve, they're going to be left holding the bag or holding the ball when they can't kick the can down the road that's kicking it back up the hill. It's not going to work. So anyway, that's just my view on markets. Might sound a bit bearish, but for me, markets need a flush, I think, and we're getting closer to rate rises. It's just whether we all get surprised and they do lift rates and the market don't be surprised if it's bullish for a couple of days and then we go bang, straight down again. But we'll see. I think a lot's been factored in. They're not trading at fair value. PEs are a lot higher in the US, than they've been historically. In Australia, let's just look at the ASX. Chuck in some shares if there's anything you want to look at, or anything at all you want to look at. This is the trend up. We've had a good little. This has kind of been the trend up. So we're a lot more conservative. So, maybe this could be somewhere. I think this is a good little high low to work off for me. I think what we've seen, good flush down. So you've got the market has to push up, grinds up, has a bit of a pullback, resets, goes again, pulls back, resets. So it does it time and time again. Whether it resets on a pullback, as in something like this, if you can see that. No, you couldn't, can you? Okay, if it pulls back something like this or it just pulls back sideways, market can consolidate before it runs high. It doesn't matter. We've had a good pullback, took out these lows here, but the fact is that we took them out and didn't really go anywhere. So when you're looking at this action, the way it kept holding, we've been talking about this when we held a higher low here. You could have gone a bit of risk on there, got into some shares there. We're holding a bigger higher low here. So if we get through these highs at 74, 72, you think we're going to work our way up to new all-time highs at above 76.32. Okay, so we'll see how that goes. But yeah, it's looking okay. Nothing's changed. Like I said, it's risk on. Okay, I've got this HMX. We've had it for a while now. Rode through that. It was looking really good. Expected to go a lot higher. One big sell-off since. So if you don't believe in manipulation, it's a small stock. Markets can be bullied easy. You have the best news in the world, it could still go down. And they had some quite good volumes come through here. Solid news. That's HMX Hammer. I think it's still good, but it's not looking good. ADN. ADN is much the same. It had a big following here. The problem is everyone talks it up. So if you could go back to that time, even through here when it was rallying up there, I'll draw it up. Let me just check that on. This is why I'm a big believer in trading. Okay. All right. Just get a bit more. So when it was, around here, and it was starting to push up there, well, it was pushing up there. If you go back onto Twitter and you look at things, everyone was talking up. It was looking great. There's a few people out there that were saying um, it's not good, and they were getting bombarded. And so be it. People trolls will bombard them saying, "No, you don't know anything about it. It's looking good. Great this, great that. The prospects are good. It's run by a good company. Good um, CEO and everything been around. That's all great." For me, because it's small, it's not really small, but because it's a relatively small one, they're going to produce something. It's not. It's going to have a limited supply of traders. Everything's supply demand. So if you're buying out here expecting it to go higher, after we've had some consolidation, and we've had that sort of third leg up, you could be asking a lot. I mean, you may be asking a lot up here. You may have sat through that, and okay, it's worked out okay. If you're buying here, you're happy as Larry because you still got a lot of fat in the trade. But the market, if it's running out, you don't know where it's going to run out. I mean, all we're doing is anticipating. Okay, if that's the first move up, when it comes, so the market sort of chops around and does nothing for a long time. It has a first push up. It's not using a lot of energy. Your first pullback is what you'll be looking at. And when it has that secondary move up, if you've got on board, you know where your risk is. Okay, but what you've had is two legs up, and you're using a lot of energy that might be waiting on the sidelines to go in and keep pushing that price higher. But when you're up here, a third time round, if you're sitting on the sidelines here watching, you watched all that, and then some people would have got in that second leg up. Some people wouldn't have. So if you're still watching it here and you didn't get in here, you're probably never going to get in. If you did get in here, it's kind of like the third time up, you've used up quite a bit of energy. Okay, so you've got to ask yourself, what's the likelihood that is, what do they say, a bigger sucker on the sidelines ready to come in after me? Okay, and that's why you get things like this. It could turn. It doesn't matter what your fundamentals say. If there's no one willing to buy it, people will get. Okay, people will talk on Twitter. They will say this, that, and the other online, saying you've got to be a holder. It's a great company. This, that, and the other. In the meantime, they could be on the computer selling. Okay, because it doesn't matter what they say. The fear of loss is the same as the fear of missing out. Okay, the fear of missing out drives them in, and then the fear of loss can drive them back out again. There's always that group of people. I mean, it happens to me when I'm into intraday trading. I'll be watching it, waiting for a buy, and it just doesn't meet my criteria, and I end up chasing it, and I chase it right at that time when it turns around. I'll be buying something up here, and then getting stopped out because it doesn't meet my risk parameters, but I just couldn't help myself. It doesn't happen all the time, but it still will happen. Okay, so that's, to me, all markets have a finite amount of juice to go into the market, and this is kind of a prime example. Is some really good talks and good news announcements. It got pushed up, it got ramped up. Everyone was talking about it. When everyone's talking about it, when you heard the thing, when the cab driver's talking about it, buying into something, you're probably best to get out of it if you got it. Okay, because there's no one left on the sidelines probably to jump in. All right, so that's just my theory, and that's, as you know, how markets work, what I'm looking for. But now that we've come, in saying all that, let's just clear up this chart. Let's go all the way back here. All right. Now that we've come down here, and you can see that was a sharp move. That was a bit of selling. Another sharp move, but this kind of selling down here, we took out these lows just in here. We didn't get anywhere. Okay, so that there is a good sign. And now we start to take out this little high. Okay, and you can see we've taken out that high after flushing these lows. So that to me is a bit of a line in the sand around the 14 mark, that buyers are willing to step in here. So anyone that's been flushed out is potentially watching it. So just like we've done on the upside, running out of buying strength, we're doing the same thing on the downside. We're running out of selling strength. Okay, and there's going to be interest here. If you've watched all that go up, or you're a bigger player, you're looking for a lot longer term, 10 years or so, you're probably going to buy a bit here, buy here. You maybe not wanting to buy a bit up there. You might have taken some profits off there, re-enter again on a pullback. So again, there's all these different styles of trading that wants to jump in, of traders, different reasoning. So BHP, yeah, look at that, mate, no problem. So yeah, we're obviously consolidating through here. We're obviously in an area where it's starting to perk the interest again, and we're starting to lift. So this here, what I'd ideally like to see is if, just say that's the move up there. I'll just draw a different color. That's the move. We're sort of here at the moment, so we can go up, pull back. We're about here. I wouldn't mind seeing it, a bit of consolidation, but inside a level above this zone here around 16, 17. So above this low here, I want to see that inside consolidation. So what that does, the more it goes sideways here at a higher level, if you're waiting for it to come lower, you'll start to change your mind. And if it starts to lift through the highs, that to me, you can, it's a good little buy and entry because it's held these inside levels by as a support net. And that's not only the inside levels here, it's at a higher level on a longer term chart. And that to me leads us to think that we're going to have an up, pullback, up. Okay. So if we can get some sort of consolidation just through here, just below, say, 21, 22, just below that, or even below this high, that inside consolidation, and we start to lift, like I said, anyone that's wanting to buy it and is waiting for something down at 14 again, you're going to have to readjust their consensus or readjust their strategy or replan the trade. Okay, so that's what I'll be looking for. Let's get on to, oops, so what I want to get on to, what's the next one, Pete? NTO. NTO is Nitro. All right, we're good. Hope that helps, Pete, anyway, but let me just look at a weekly chart. Well, that's everything, isn't it? All. Okay, so there's not much more than that. All right. So you can see, let's just go over to all. You can see it's open, gone so it's flushed down. I don't know if that's where it opened, but if that was the IPO or whatever, it's taken out some weak hands, and then we've had this good run up. So if we go back to, where is it? Here. It's had a good leg up. You'd say that's your pullback. And don't forget, you've got your pullback in a couple of legs. We're always looking at pullback, pop, deeper pullback. So love to see that. So after you here, it would have been a bit tougher to jump in. That's kind of that trend up was still intact. Once we got that, that's flushed out a lot of buyers. So that to me, and I've got a lot of lines on there, is all part of this pullback. And now we're looking to, we've had another leg up. The problem with this that I'm seeing is it's not, we're struggling. This is a bit different to this run up. Okay, so are we getting up to highs where it's fair value? I'd like to see, a good strong move up, bit of a flush down, then build. And you want to see a sudden, if I get an entry like that and we start to stall up near those highs, I'm thinking twice about it. If we don't, if we blast through, yeah, it's a good strong move. But the fact is this leg up or this move up here, back into the highs where we pushed through the highs, then failed. So the move up through was a lot less than the move back down below the level. Okay, again, back up above the level, retested it high, straight back down below level. Okay, we're coming to a higher low here. We're holding higher lows, which is, technically is a good thing. We're trending higher, but we got through that high. If we're going to do the same thing again, we pop through the highs, we could have a deeper correction back towards this low. Okay, so all in all, it's not telling me it's a good, strong, it's in a trend up, but if I'm going to buy it up towards the end of that trend, can I expect a lot of movement to the upside? Maybe not. I might have to wear a lot of pressure before I can get any gains. I might be holding this thing for a year. Okay, if I, buying it in here, you've sort of been up, back, say you bought it around here. You can see it's pushed up. You've been in front, been in the red, been in front, been in the red, been in front. Maybe you're going to be in the red. So you're kind of looking at it going, I'm getting sick of holding it. Maybe I could do better with this money I've got. I could put it somewhere else for yield. Okay, so yeah, it's trending higher. I probably wouldn't get into it personally. It's not the kind of thing that I'm looking for. It's going in the right direction. It's holding higher levels, but if the market rolls over, we have a bit of fear-based selling. This thing could get hammered because it has, all this time it's stacking up the buyers. BHP. All right, Alan, are you in this one or is it something you're looking at? we'll go to a weekly chart. I mean, it's got, obviously, there's a lot more fundamentally with BHP. I think iron ore has hurt it. Commodity prices, others have hurt it. It's on a monthly basis, we push through these highs. Doesn't mean much. 20 this year, push through to new highs, slam straight back down again. Big beating straight back down again on your weekly. It's really okay. Let's come up with a reason why you might want to look at it. So for me, this is more about the entry than where you enter, because if it starts to show some signs that it's going to lift, you've got a beaten down here. Oh, and that's not it, is it? Oh no, it is. It is. Sorry, it's the current share price. So I wouldn't buy it just into that low, because you got a low just below it. I mean, you could easily push through it. You could get to there, but again, if it comes into that level, I wouldn't be buying it just there. So what I'm saying is, I wouldn't be sitting on the bid buying at that level, because if you're the kind of trader that does that, if it's got a support zone here and it's coming down into the support zone, and you've got your bid, say somewhere in here, for instance, X marks the spot, then yeah, you get actioned, you're looking good, get slammed. Okay, so if you are doing that as a trader, why didn't you do it there? Why didn't you do it there? Why didn't you do it there? And what's the reasoning why you didn't want to buy it there? So if you're going to do it there, I guarantee there's going to be sooner or later you're going to get caught. If you have your risk, if you're managing your risk, fine. Okay, but managing your risk by just closing the computer down that's not managing. That's putting your head in the sand. But if you're going to have a stop below the level, there's going to be times when, like this, it's come down to that level. You bought into that level, it's popped up, you got stopped out. Okay, it's going to happen time and time again. Right. What I would be more inclined to do is see we're below the MAs here. Say something like this. The market's trending down. We popped up. We're back above the MAs. We sort of got, if you can see, this minor consolidation through here. It's only on, over the period of a few days, and it breaks out to the upside. Then you know exactly where you can put your risk and exactly where you can buy. Okay, it breaks to the upside. So basically, what we're saying is, if it comes into support, well, we'll just take that out. We don't want to buy at support like that. It may flush through, it may not. What we're looking for is a higher low. Okay, higher low, it means we know exactly how we can box up our risk. Okay, we know exactly where our entry should be. We know exactly where we're going to put our risk, because the likelihood that once it holds at a higher level, at a support zone, for instance, as what you've marked up as a support zone, if it starts to hold up, it's got more confirmation that support. So not only yourself you're buying it, it shows you confirmation to everyone else that's interested in buying BHP, funds or whatever. And you might, if you're buying off that high low, I think it's got a higher probability of success. Now, if it starts to come down again, you just pop up. We do this kind of thing, which we can do, drag some buyers in, and then bang, then okay, so be it. That was a sucker. It's not really, we haven't found the base yet. Okay, take your stop, take it on the chin, and just wait till it starts to build at another level. Okay. Even when you get this massive sell-off here, you can see that it hold a higher level in there. And you had many times, I want to drill in that because I think that's a good, you can see that. I'll drill in on that action. Okay, here. I think that's a good example of, we had a beating down here. So people would have been saying, you can guarantee it, they won't tell you because it's they know it's wrong. They buy when it's cheap, buy when it's cheap, buy when it's cheap. Maybe not in there, but buy when it's cheap, buying when it's cheap. They'll tell you about this one, the fifth buy on the way down. They'll say, I bought the low, so you didn't tell it. You're still, for the next year, you're still averaged down on the position because you've averaged down on it, and your average price is way up here somewhere. So even right up until probably the start of this year, you could have been in the red still on that overall trade, but they'll tell you about this one trade at the bottom. Okay, if you're trading this, to me, there was nowhere on the way down to buy. Okay, you buy in that low, we gap down the next day. Okay, we've got a green day. You don't buy in that green day. If you're buying intraday, that's fine, but you've got to still know where your risk is. It's the same thing. Okay, lower high, lower high. So we broke up here on this green candle here. We broke up and then we started consolidating. We held this inside level. Don't know what it is. 20, 25 bucks. We held this inside level. So that is the first occasion where you go, okay, we could be buying. The way I like to look at MACDs, we're starting to push up. Momentum's starting to shift from moving down to moving up. I love that. Okay, we're starting to hold at a higher level. We've got a green day there after we flush down. Secondary green day. Okay, probably a bit hard to buy here, but even if you did, you know your risk could be down here. But if it retests there and it starts to hold again, you could be buying in there, buying in here, or buying on this rise. That to me is a much better probability setup. Okay, and you've got to say, yeah, you haven't picked the bottom, but if you're margin trading, for instance, you're trading the CFD, when you've got more confirmation and a smaller risk, you know exactly where your risk is, you can have a bigger position. Okay, you can take bigger risk on that position because if you're buying on the way down there, and if you're trading, I don't want to say correctly, but if you're saying I've got a $500 risk, you've got nowhere to place your stop. You might have a wider stop. So you're trading, instead of trading 1,000 CFDs, you might be trading 500, for instance. But when you know exactly where your risk is, you can trade 1,000 and still risk at 500 because you know exactly where your risk is. Okay. So that's what I like to see. You know, that there's where you sort of want to buy that breakout there because you know where your risk is. You can buy in here. You might buy that retest. You might buy the break of that candle with your risk below. Okay. You come under pressure a couple of times, but you're still held. So whatever your reasoning is, you're still buying on the rise there. Right. So if we go back to where we are at the moment, and we'll drill in on that. To me, there is, we've got something in here. You could have got stopped out. Okay. That's just the way trading is. It was looking okay. It was similar to back in the pandemic. I'll just draw that up. So we've got, I hope that's clear enough. We've got the markets pressing down. We were holding lower highs, a lower high in here. Then we held this inside level. Okay. So what we did was come down, pop up, and then we've gone back up again. So if you bought on the rise, like we were just discussing previously, when the pandemic hit and the market just went straight up, if you bought on the rise there, that's fine. You were in front. Okay, you bought that breakout, you're in front, your risk is below. If you didn't take anything off, or you got this lower high, you didn't do anything about it, then yeah, you've taken a loss. But it's a small loss. You don't know where you're going to go. But you live to fight another day. You might have taken a small loss, but all this move down. If we get back up to the highs, there's a lot of fat in the trade on the way up. Okay, and you can even add. You can buy a higher low. It works out. You buy the next higher low. It works out. Okay, so you can add to your position, build to position when you're in profits. So to me, that is a lot better sort of a strategy, right? So at the moment, all I'm seeing is that we've got this low here. Well, I'll take that out. We've got two lows, that low. We've got some confirmation. So double bottom, don't know. It hasn't confirmed it yet. To confirm for me a double bottom, I'm looking for a press in again, and we start to hold a higher level. That's what I'd be looking for. We hold a higher level, then to me, we're starting to at least flatten out, and we found the base. Maybe it's not ready to go, maybe it is. But if we get a higher low, we start to rally, I think that's going to be a good little bet that we're going to take out that level, and that's going to drag in a lot more buyers. Okay. I hope that makes sense, Alan. But yeah, I wouldn't buy it just here yet. I want to see some sort of confirmation that I'm buying the rise. I wouldn't mind seeing this pop back up above the MAs. MAs at least flatten out a bit. Okay, if the MAs are flattening out, it means the average is a buyer rather than the average being a seller. Like MAs are down, average person's a seller. Okay, we start to flatten out, it's more 50-50. We start to rise, the average is a buyer. DRE, something I've been watching. So you are looking at that, the depth. Oh, look at that seller. Load of rubbish that is. Right at 7.5 cents. Bit of a wing and a prayer on that one. It's been bought up okay, isn't it? It's stacked. It doesn't look that flash, but it's that's what you're talking about. The depth there is looking good. That, to me, I actually like that. So I do these report, for the bull. If anyone doesn't know the bull, it's the bull.com.au. You're going to have 2 buys, 2 holds, and 2 sells. So I've got to do that after we jump off here. And I think one of my buy is DRE. I love this kind of action. Good action here, good run up here. We've flushed out a lot of traders. It's reset at a good high level. Good run up again. Got a bit ahead of itself through 6. We've had the pullback, so the late buy has been squeezed out. Support's come back in at 350. So the fact is we got that support come back in at 350, and this is kind of the first time you can see we've had a run up, pullback, bit of a pop up here, bit eager. The more you hold the level, the more it's going to drag in buyers. And we started to run up a bit here, come back into that level, flushed it, come back up. So we've taken out this little level at say 4.1, 4.2. To me, it's the first time it's sort of a lower high has been taken out. So if a lower high has been taken out, to me, we're going to go sideways or we're going to go up. And I like the look of that there. I'm starting to look at, cup and handle. I don't know if you talk about that. Cup, handle here, bit of a cup, starting to pressure higher. I like the look of that. I don't know if I got my cup and handle terminology right, but yeah, it looks good to me. Go to the weekly, into new highs, good volume on that run up there, good volume on that run up there, flushed out a few. Has it done enough work? Like previously, it took a bit longer before we started to rally again. Are we going to go sideways still a bit more, like we did here? Maybe we go a bit deeper. I don't know, but I just think on the daily, it's looking okay. Okay, so ideally, what I'd like to see is those, rather than be flat like we were here and we went back down, we're flat here. I'd rather see it pop up. If we can start to hold a higher level again, I think you're going to see harder spikes, less of a pullback. When you start seeing that, you know that there's momentum starting to build to the upside. So that's what I'll be looking for on that. It looks good. There's other AIZ is another one I'm going to probably say I think that looks pretty good. That weekly chart is looking okay. Daily chart, we've dragged that in a bit. Daily chart to me is looking okay too. We've had run up here, big pullback, big major lower high here, took out the lows, but the fact that we took out lows, say around $1.40, we didn't take out that much. We went up probably a few cents before we had a good rally again. To me, that move there, we're starting to lift again. So that, to me, if you put all that together, big move up, 1, 2 moves down, start to lift. This is a higher low. We start to hold off on these MAs. I think we're going to go through 165, start to attack 180, 190 and above. I think it looks pretty good. That's another one I'll be talking about. So, yeah. Anything else you want to quickly look at before we call it quits? We'll probably call it quits, actually. Nothing else. Shop closed. All right, guys. We'll call it a day there. Thanks very much for joining me. I hope you enjoyed that. If you do enjoy it, it'd be great if you can leave us a like, help us spread the word on. I've got to make sure that next time round the stream is on the right provider. If I don't, someone remind me, and we'll start building this stream up again. So we did. If anyone that doesn't know, we changed from trade setup before, and now it's under trader structure. We had quite a few viewers that would jump on. Now they've sort of lost a few. So if I can build this stream back up again, once a week on a Monday at 12:30 Sydney time, yeah, we'll keep pushing it. And any questions, welcome. Being a technical analyst, I can pump at my view on any. And if there's anything you want to look at to talk about, as in the way of educational stuff, like you might want to say, I know I mentioned that to someone before. What they want to talk about, they're talking about levels. How do you pick out levels? Okay, fine, we'll talk about that. I'll explain what I'm looking for. I mean, if you've been a listener for a while, I know Pete has, John's been on for a while. There's a few newies there, but anyone that's been for a while knows what I'm looking for, how I'm trading. It's just a matter of whether it makes sense to them or not. Okay, so yeah, anything else, just chuck it in, put it into or send them an email to tradethestructure@gmail.com. You know that one, just send us across and we'll do it as a bit of a theme rather than me just talk about markets, what's happening. Nothing much is happening at the moment, so it might be wearing thin. All right, guys, I'll call it quits there. We'll finish up. Thanks for joining me. Yeah, leave us a like. If you haven't subscribed, that'd be great if you can, and we'll go from there. Cheers, guys. Enjoy your day.